Hello, everyone. Thank you for taking the time to join us. And I'd like to begin on page 1 of the slides. When the pandemic hit, it was quite a surprise to all of us and created a great deal of uncertainty. It led to a shelter in place virtually around the world and restrictions that went with it. And in the process, the pace of construction and therefore our trading slowed down. Fortunately, in virtually all parts of the world, construction was considered essential, and therefore our customers could work at a much slower pace, and our factory stayed open. All of our employees that could work from home were transferred home, and we rearranged our factory so that we had social distancing and testing. And that I can tell you worked out very well. When this started, we quickly implemented our plan with 4 main objectives: to protect the health of our employees, which has worked out very well. At the beginning of the pandemic, we had about 180 employees. We've had a few people that had to do some quarantining and 1 person that turned out positive. So this has had a very positive impact on all of our employees and our ability to service our customers. We did do a right-sizing campaign so that we could tie our manpower on the operations side of the business to the sales that were there and the products that were being produced. This helped us preserve cash and protect profits. During the whole process, we have continued to work on our commitment to product development. We've been expanding our investment in product development. We're very proud to say that this year we've set a record by introducing 3 new products so far this year. And John Yuncza will talk to you more about them later on. We remain very cautious, but confident about what we're seeing ahead. We were very encouraged over the last 3 months to see activities continuing to grow. And one of the things that I think is really important is that before this started, we had a very strong backlog from all of our customers, strong non-residential construction forecasts, and everybody was looking forward to an improved year. Those fundamentals have not changed. Our customers still have strong backlogs. They're still doing a great deal of bidding for the near-term future as well as into next year. And all of these fundamentals look very positive at this moment. And with that, I'll go over the highlights with you. The first half of the year was slightly less than last year at 35 million versus 39. I talked about the cost reductions and the cash management that drove our strong profitability and cash flow. And I mentioned that we still continue to invest in the long-term growth possibilities. We have announced the resumption of our dividend. We have also put back in the $1 million share buyback. And when we announced back in March, we did not give any clear guidance at that time because we weren't sure as to what was going to happen, what was going to be the impact of all of these shutdowns. And we're glad to say that the impact wasn't as severe as we thought it would be. At that time, we had given indication that we were going to be somewhere in the $65 million range for revenue. Our new guidance is now $75 million, with $19 million of EBITDA and $20 million of year-end cash. And with that, I'd like to turn it over to John Yuncza to give you more detail.
Thank you, Jack. Walking through the sales by territory, starting with North America, we saw a modest increase year over year, but it's important to note that the first half of 2019 in the US was adversely impacted by historic levels of rain. So the comparison year over year is a little bit skewed. But as Jack said, importantly, the underlying health of the non-residential construction market in the US remained intact throughout 2020. Our customers continue to report extended project backlogs, which provides a degree of confidence for us going forward. The pickup in the first half of 2020 was really seen at the end, as we approached the end of the first half, as momentum started to build and that was correlated directly to some easing of the shelter-in-place restrictions. And also, we did see some good contributions from new products that contributed directly to the North American performance, particularly the SRS-4, the new version of our Line Dragon, and our 3D profiler system. So all good signs, good contributions from new products, and an underlying healthy market. Europe is similar. While the revenues were down, more notably about 25% year over year, and definitely impacted by COVID-19 restrictions, we also saw an improvement in momentum as we ended the first half that appears to be carrying over into the second half. That points to expected improvement in the second half compared to the first. And also, we're looking forward to increased contributions from new products in Europe, particularly the SRS-4, which we believe is particularly well suited for the European market. In China, performance was also down, was impacted by COVID-19, as all our markets were. However, China is a little bit different in that the restrictions were much more severe, but also much earlier in the year. And activity has begun to normalize in China at a faster pace than what we saw and have been seeing in North America and Europe. Also, we have had a very positive impact from our local leadership. Our local manager that's in place in Shanghai has continued to provide very stable leadership and important guidance as we continue to work to penetrate that market. So we are looking for improvement in the second half in China. And longer term, the meaningful growth opportunity remains dependent upon demand and acceptance for quality flat level floors. And we are seeing that as taking hold slower than we originally anticipated. Once you get outside the main three markets, into the Middle East, Latin America, and rest of the world, all of those markets were clearly impacted by COVID-19. All have smaller bases of revenue, and certainly as a result, trading will generally be more volatile in these territories. As an example of this, in the rest of world category, we saw Australia and India, two markets that were impacted by particularly severe shelter-in-place restrictions. They had experienced a fall-off in revenues between 2019 and 2020 of approximately $1 million in each respective territory. And that was the main reason for the rest of world decline. Going forward, we do expect to see opportunities in all these markets. However, those opportunities will be directly dependent on the control over the COVID-19 virus spread. And that's something that we look to very cautiously going forward. So now jumping to slide 5, sales by product, starting with boom screeds, we saw a roughly a 28% decline year over year. That was driven by reduced unit sales in S22s and S15s that were offset partly by increased contribution in sales from our new product, the SRS-4. It is important to note within the boom screed category that the S22s and the S15s and the SRS-4 are all designed for different types and sizes of projects, so that the year-over-year comparison that you see is impacted by project types. So the project types is really what dictates the product mix, and we are not experiencing any fundamental shift, permanent shift that we anticipate within the boom screed category. With regard to ride-on screeds, the comparison also represents about a 14% decline, but within that category, sales of our S940s were very comparable year over year. The decline was driven more by sales of S485s, which were directly impacted by the shelter-in-place restrictions in Australia, which is where the S485 is a very common, popular product. On the positive side, remanufactured machines actually grew a little less than $1 million year over year, which represents an uptick in volume sales for large line and some small line remanufactured equipment, particularly in the US. And while lower margin, that does provide the benefit of reducing our remanufactured inventory, which has a working capital benefit and a cash flow benefit. So we feel very pleased with that outcome. With regard to the 3D profiler system, we had very good growth in that category. That's a product that is a complementary product to our laser screed. It allows utilization of laser screeds for exterior paving projects, which are very commonly found in the US. Very good performance in that product. We continue and expect to see good opportunity going forward from the 3D profiler system. The Somero Line Dragon also grew notably over 50%. We had $1.7 million in sales in the first half. That represents a full 6 months of selling the next generation Somero Line Dragon. So when we acquired the Line Dragon assets back in the beginning of 2019, we quickly set to work to design the next gen version, which combined the best features of the SP16 and the Line Dragon to form the Somero Line Dragon, which is the best of both design. And we had good traction with that in the first half. It's tracking with our original expectations when we acquired Line Dragon. So we feel very pleased with that outcome. The Sky Screed sales were very comparable, a very low volume. It represents the sale of one Sky Screed 36, which is the new product we launched this year. Sales of the Sky Screed family were very much impacted, probably more so than any other product, by restrictions that limited our ability to perform product demonstrations. And the product demonstration is a key element to the selling process for a disruptive new technology such as the Sky Screed. So as those restrictions begin to ease, we expect to see improved activity and improved amount of product demonstrations going forward, which will directly benefit the trading in that category. And then lastly, the other category, which is primarily comprised of parts and accessories and training, followed the overall volume trend. So it represents a continued amount of good activity underlying the business, but certainly the training was impacted by restrictions, which limited face-to-face trainings, and the parts sales obviously were impacted somewhat by the overall lower volume. So in total, that comprises roughly a 9% decline. With that, I'm going to turn it over to Enzo to walk through the financial summary.
On slide 6, we have our financial summary. As John mentioned, total revenues declining 9% or $3.7 million. That translated into a $2.5 million decrease in adjusted EBITDA, which is mostly reflective of the lost gross profit from that revenue decline. The added volume pressure also impacted our gross margin to some degree, approximately 130 basis points. In addition, our OPEX increased slightly, which created some additional margin pressure on our EBITDA margin. For the next three metrics, profits before taxes, adjusted net income, and diluted EPS, all declined at approximately the same rate, between 28 and 29%. Cash flow from operations was very strong, as John mentioned, reflective of our working capital management, as well as the cost-cutting initiatives that we implemented in the first half. That, in addition to deferring our dividends to later in the year, led to our ending cash balance of almost $29 million. And with that, the board declared an interim dividend for 2020 of 4 cents per share. On to the next slide, our operating results. So despite the volume pressure, we did maintain approximately 55% gross margin with a modest decrease, as I mentioned, of 130 basis points, mostly due to lower volume, but also due to the product mix. As John mentioned, our remanufactured machine sales increased about 42%, which bring a lower gross margin. Nevertheless, we expect to maintain a mid 50% range gross margin as we're able to adjust our cost model based on our top line demand. In terms of operating expenses, as I mentioned, there was a slight increase. We had some puts and takes. On the one hand, due to the timing of new hires towards the end of last year and partly this year, we had an uplift in our operating expenses. But on the other hand, we had lower expenses associated with things that are tied to revenue, such as commissions, incentives, bonuses. The travel restrictions obviously also resulted in lower travel expenses and lodging. And in addition to that, our management imposed cost cutting around discretionary spending, such as marketing, brought down expenses. So generally, in line with last year with a little bit of an increase. As we move forward and revenues resume a more normal level, we would expect that these lower expenses will come back as well. Thirdly, our effective tax rate for the year is 23%, consistent with prior year, and we wouldn't expect any changes going forward. On to the next slide, which is our financial position. As I mentioned, a very strong ending cash balance overall, a strong balance sheet. Our receivables declined, partly due to very strong collection efforts, as well as lower trading. Our inventory increased partly due to new products that we introduced. We mentioned 3 new products this year. In addition, obviously going into 2020, we were projecting higher trading, and since that hasn't come through, our inventories are temporarily uplifted. Moving down to current liabilities, the increase from the end of last year is really reflective of the deferred dividends of 11.7 million. So if we strip out the deferred dividends, our current liabilities would have actually decreased 1.3 million, which is reflective of the decreases in operating expenses. Onto our cash flow. Again, very positive, very strong cash generated from operating activities. The cash used in investing activities mostly reflective of capital expenditures associated with the expansion of our facilities, both in Houghton as well as in Fort Myers. Both of those projects will be coming to completion by the end of this year. And then for the full year, we would expect approximately $3 million of CapEx. On a go-forward basis, we're generally at about $1 million, and we don't have any other large-scale CapEx projects in the pipeline. Third point here, obviously, the omission of payment of dividends, which we have deferred to October. The next slide, slide 10, is a nice illustration of the total dividend that will be paid out here in October. As a reminder, our dividend policy is to pay out 50% of adjusted net income in the form of an ordinary dividend, 50% of excess cash over 15 million in the form of a supplemental dividend. So relative to 2019, the carryover totals about 11.7 million. The 4 cents per share interim dividend for 2020 calculates out to 2.3 million. So for a total of 14 million in a dividend payment in October. In addition, Jack mentioned we have reinstated the share buyback program. So that'll be an additional $1 million use of cash. So when we look at the second half cash generation, plus the dividends that'll be paid out and the cash used for share buyback, we feel very comfortable ending this year with approximately 20 million in cash. And with that, I'll hand it back to John.
Okay, thank you, Enzo. So I'd like to spend a couple minutes and give a strategy update and speak a little bit to our outlook statement regarding the second half. A good place to start, I think, is to go back to the original vision for the company, which was for us to deploy and leverage and utilize our technology that we've developed wherever there's a ready-mix truck discharging concrete for horizontal concrete slabs. And that in and of itself represents a vast, broad playing field of opportunity. And while our current products are focused on the slab on grade segment of the market in the non-residential space, our product development team has continued to seek other opportunities and market segments that we can leverage our technology to provide solutions for customers and provide additional revenue streams for the business. The best example of that is really the Sky Screed, which opened up a whole new unpenetrated segment, which is the high-rise structural segment. And we feel very happy and encouraged and positive about the opportunity that segment represents. And we've really only taken the first couple of steps towards penetrating that market. But our team continues to look for other new segments beyond that we can leverage our technology. And we've identified a number of those and continue to work on new products to target those opportunities. So we feel really good about the pipeline of targets that we've developed, working alongside our customers to identify those segments. And we've had great contributions already from our activity from new product development this year by launching 3 products in the first 6 months, which is the most we've released in such a short amount of time. That contributed directly to revenues immediately. So 1.6 million in revenues came from these new products during the first 6 months. And we've grown our product portfolio to 17 products and our IP portfolio to 78 patents and patent applications. So really good activity in the engine that really drives our business, which is product innovation. And the second leg of our strategy is to take those products and services and penetrate the vastly underpenetrated global market. And we've invested in that by having personnel placed across the globe to really push both market development activities as well as selling our portfolio of products into those markets. So we feel very confident in the strategy we've laid out, and we're executing in line with our goals. And speaking a little bit about the new products on slide 13, the first of the 3 new products that we launched this year is the SkyScreed 36, which extends the SkyScreed 25 reach by 11 feet, which sounds like a simple enough engineering advancement, but there's a lot of complexity with extending the reach. And our engineering team designed a very robust, high-performing solution to increase the reach of the SkyScreed, which allows the operator to screed an additional 1,000 square feet per placement, which importantly reduces the pick placements required on a deck. So that makes it a much more efficient solution. We're very pleased with the performance of the product. And the challenge, as I mentioned earlier, was to get the SkyScreed family onto job sites for product demonstrations, which is a critical element to the selling process. Restrictions on job sites limited third-party visitors, and that definitely created an obstacle for us. But as those restrictions began to ease, we did get the first sale of a 36, SkyScreed 36, at the very end of the first half, and we look forward to an uptick in activity in product demonstrations going forward. The second of our new products is the SRS4, which is a very different product than the SkyScreed. It's something that's much more familiar to our core customers. It's a boom screed, but it's a very lightweight, easy to transport, and compact boom screed. It's just a little over 2 tons, able to be transported on a trailer attached to a pickup truck. Makes it a very good option to reach harder to reach job sites if there's transportation challenges or restrictions. It's also remote controlled, so it has very good visibility in terms of being able to see around the machine, which also improves some safety elements. So very good traction from this product. We sold 1.1 million in a little over 4 months of trading, and look for continued increased contribution from this product going forward. And then the last of our 3 new products in the first half was the Somero Broom and Cure, which is not a laser screed. What it is a mechanical solution to apply curing agents and textured finish to exterior concrete slabs. It's a product that is very much geared towards the US market, where you will find more exterior paving opportunities, such as parking structures. And this provides a solution for customers to comply with prescribed American Concrete Institute standards for those exterior slabs. The alternative to using this machine is to do that process manually, which is very cumbersome, very costly, and in some cases, it's virtually impossible to accomplish. So it's a really good niche product for us. We feel good about the opportunity. We launched it at the very end of the first half, sold the first machine at the end of the first half, and see a good opportunity for this product going forward. So now jumping to slide 15 to speak a little bit about the outlook that we provided. And a number of these points were covered earlier by Jack in his comments. But in the US, we see a very positive underlying non-residential construction market conditions. Our customers continue to report very good project backlogs. They have a good amount of confidence in the work they see in front of them, which gives us, in turn, a good amount of confidence. We also are very encouraged by the demand that we're seeing for our new products, such as the SRS4 and Broom and Cure, and also the opportunities presented by our other new products that we have in our portfolio. And we see the building of momentum that's been carried forward into the second half. So that gives us a very good confidence in our largest market. In Europe, similarly, we've seen some signs of improvement as we exited the first half that also are carrying forward. We're expecting and looking for market activity to continue to normalize. And we're also expecting to see some drivers that will include the demand for new products. We do believe our new products we'll gain some traction in the European market, which will contribute to performance in that territory. In China, as I mentioned earlier, the normalization of market activity is a positive, along with the local leadership, which both point to expectations for some second half improvement. But longer term, obviously, the bigger catalyst for meaningful long-term growth remains market demand and acceptance of quality flooring. With regard to the markets outside of the primary three markets for us, we are expecting to see a degree of volatility in these markets, with the performance in each being dependent on control over the infection rates in each territory. So we're cautiously looking at those markets and will be opportunistically capturing deals when we're able to. With regard to the longer term view, we feel very confident in the new product development efforts, the pipeline of new products we've brought to market, as well as products that we expect to bring to market in the coming years. We think that is a very healthy part of our business, and it's an area that we will continue to make sure that we're investing in to capture that growth. So with all of that, we have reinstated financial guidance, as Jack indicated. We feel that the year will be targeted a $75 million in revenue, which is an uptick from our previous statements. We believe that translates to $19 million in adjusted EBITDA and ending net cash of approximately $20 million, which will be after the payment of dividends and the share repurchases. So we feel very good about the financial outlook that we've just stated here, and are cautiously optimistic about the rest of the year. So that completes our prepared remarks, and we would be now happy to take any questions you may have.
And we have our first question from Paul Hawkins. He says, thank you for the presentation. I'm interested in boomed screeds particularly. Product diversification is welcome, but you still remain dependent on this product line. Demand for boomed screeds seems more volatile and subject to fluctuations more than other product lines. So I'd be grateful to hear any guidance you could give us on this product line, both for the current year and medium term.
Yes, this is Jack. I can understand what you mean when you're looking at it and thinking it's volatile. A better way to look at the products being sold is to look at the customer's point of view, which is that he buys different size equipment for different jobs that he has to perform. So if he's performing a lot of large projects like warehouses that do 1 million square feet, he's going to need his large line machines more frequently. Whereas in his area of the country, our customers only travel about 200 miles from their home, generally. So the sizes of work in their work area will change over time. And that's why you see, as if you've looked back through the years, you see that there are changes between the small line products and the large line products. But it's driven purely by the work that our customer has rather than our customer's desire for one or the other.
Thank you. And Sam Morland asks, what gives you confidence that sales of Sky Screed will increase once you're able to perform more product demonstrations?
Our activity with the customers on Sky Screeds has been very, very positive. This is a brand new invention. It's a machine that doesn't exist anywhere in the world today. So when you're introducing something that innovative to a customer who has a big work crew, typical work crew for this kind of a job could be 20 or 25 people, and he's going to have to change his whole methods of operation to incorporate the Sky Screed. And in the process of doing that, he's going to use less people. Therefore, he's going to be laying off some of his people. He also has to work with plumbers and electricians to change the level of protrusions that come through the floor so that when you're doing the screeding, they do not get in the way. So there's a number of things that the customer needs to become comfortable with, and his management team and employees need to be comfortable with. So that's what makes demonstrations an absolute must so that everybody can see it. But we know from the number of people we've talked to that there's a great deal of interest in it. And that's where our confidence comes from.
Thank you. And there's two questions about dividends and share buybacks. Sam Morland asks, do you think in the future that you'll continue to use primarily dividends rather than share buybacks? And Mark Atkinson asks, over what time frame is the share buyback?
Sure. So we would expect that the primary method of returning excess capital to shareholders will continue to be dividends. And that's based on shareholder preference and extensive interactions with our shareholder base to understand, what is the primary and preferred method of returning cash. With regard to the share repurchase program, that will be completed by the end of the year. So we expect that will commence and has commenced and will be completed comfortably by the end of the year.
Thank you. And Gavin Laidlaw asks, can I have an update on the academy? You started to train users in China and America.
Sure. So obviously, as you can expect, the restrictions on travel have prevented us from holding face-to-face trainings and the like. And so currently, our training facility here in the U.S. is closed to customers. When the restrictions are lifted, we do expect that will resume. And part of the confidence and the importance of that training really led to the expansion of the Fort Myers facility, which we undertook and will be completed here within the next month or two. So we look forward to that opportunity in the future to provide additional certifications to customers here in the U.S. And we think it's a very important strategic move for us. The same is true in China. We continue to offer contrast classes and trainings there and have been hampered somewhat by restrictions on travel in China. But we will continue to offer that in the Chinese market additionally.
Thank you. And John Hanna asks, how do self-leveling concrete product developments impact upon your markets, for example, flowcrete type products?
The self-leveling concrete has been around for a long time, and it hasn't penetrated the slab-on-grade market. It's much more popular in the vertical market, where you're pouring a large concrete wall. And what the self-leveling does is it helps to eliminate voids that appear in the wall, which is trapped air. Concrete slabs are normally anywhere from 4 to 8 inches thick. So it doesn't have the same need on slab on grade that it does in the concrete wall industry.
Thank you. And Darren Ager asks, with new products, do you have to offer a discount for early adopters?
Generally, there'll be a little bit of discounting, but the general answer to that is no, that the people that are interested in it and want to be the first in their marketplace to have a cost-saving product that improves the flatness of the floor gives them a leg up on their competitors. So usually they're very anxious to grab that technology, and it's not necessarily to do any major discounting.
And Vivek Sharma asks, thanks for the presentation. Reading the results and the presentation, I got the impression that the pace of recovery has been faster in the US compared to other regions. If I'm correct in that impression, is that a function of the strength of the regional marketing or sales team and customer relationships, other factors, or macro factors outside the company's control?
Well, in general, the pickup is a function of being able to get on the job sites and continuing to work. And that has to do with the shutdowns of the virus. Certainly, the sales team plays a very important role. As John mentioned, we've had tremendous sales on the new products while there's been this substantial shutdown. So it's much more of a combination of factors, but the largest factor is that due to the virus, and the opening up, the very slow opening up of the country, that the work is continuing at a higher pace than it was previously.
Thank you. And Paul Hawkins asks, with regard to your international divisions, do you think you're attempting to conquer too many regions globally at the same time? Would a renewed focus on US and Europe not offer greater possible returns for the same investment? As an example, China offers great promise, but it has done so for many years.
So strategically, we feel comfortable with the efforts to develop the international markets, and we are able to do multiple things. So we have teams in place in each of those regions which really drive the market development activities. You know, we provide strategic oversight to them, but they're tasked with the actual work in country to develop those relationships with the influencers in each market. So we're able to have that focus, as well as focus here in North America and Europe, to continue to penetrate underpenetrated market segments. So we feel comfortable we can accomplish both, and we don't feel that international focus deters or detracts from our growth here in the US and in Europe.
We'll go next to John Brownrigg, who asks, how much trouble do you have protecting your patents?
Whenever you have patents, there's always going to be people that attempt to get around them. And we've had a number of people that have done that through the history of the company. We are very diligent about making sure that if we find any patent infringements, we bring that to the attention of whoever the manufacturer is. And if we're not able to rectify it through talking to him, we will very quickly go to the court system and get it fixed in the court system. And we've done that a number of times through the years, and we will continue to be diligent about doing it. And so far, we've been highly successful.
Thank you. And that's the end of the questions. Jack, do you have any closing remarks?
Well, I'd like to thank everybody for taking the time to listen in. And please, if you have any questions at all in the future, don't hesitate to contact us. And just quickly trying to summarize everything we've talked about today. We're really excited about the product line we've got, the future we have with new products, as we've mentioned. Not only are they new products in the slab-on-grade market, but they're new products in new market segments in the horizontal concrete market. And we're looking forward to the demand continuing to solidify around the world as we get further into the fix of the virus and markets start to open up and we get to go to work on the tremendous backlog of demand there is on a worldwide basis. So we really appreciate your time and look forward to talking to you again in the future. Thank you.